YouTube? My name is Mangubat, and thank you for tuning into my channel. I actually just got off an amazing call with billionaire Gary Keller, who was named the most influential person in real estate by Inman, the magazine. But anyways, I wanted to come to you guys with everything that I've learned through this video, and I believe through the information that I share with you, it's gonna allow you to make some very profitable real estate decisions in the next 12 months. And I'm gonna give you the state of the market overview of what's going on in both the macroeconomical real estate market and the hyper-local Philadelphia market in where I'm based in. So to kind of look at the overview of the real estate market, what Gary states is that, number one, we have to look at the historical, cyclical ups and downs, expansion, contraction, bear and bull markets of what is going on in the economy. So the history of the recessions that have happened in the United States, customarily there's been about a 10-year period in where there's some sort of market correction. So let me pull up the stats for the history of this. Going back to the last 50 years, there was a slight recession that started in 1973 that lasted for 16 months. The one after that was 5 years later in 1978, and then 2 years later, 1980, another 9 years later, 1989, which lasted about 9 months. After 1989, 11 years later, August of 2000, and then another 7 years later, August of 2007. And you see in those markets, like basically every decade there has been some sort of a recession. And what Gary's pointing out to is, the next recession after the 2006, 2008 is June of, 2020, where, the COVID market correction happened, which essentially lasted about 2 months. And here we are, 2022, and we're at the peak real estate market. So Gary's essentially saying, from a timing wise, we're overdue to having a correction, and let's just see what happens, and let's not get too over bullish on how real estate prices are. Let's be cautious so we can position ourselves, within the next 6, 12, and 18 months. What's going on right now across from asset classes is when you look at real estate market, I think the great thing about real estate is people fundamentally need a place to live, and still the markets are at all-time highs. If you look at, the watch market, that market has seen some sort of a correction within the last 4 weeks. If you look at the S&P 500 and stocks are taking a beating, down about 20%. If you look at crypto, that asset class is, down from all-time highs. And even interesting, you look at the car market, and a G-Wagon before was going 120,000 over the MSRP, and I think now you can get it at 50,000 over MSRP. So real estate is kind of like one of the only asset classes that's still at all-time highs, which makes it very interesting. And I would say, tread cautiously. Now, looking at some of the slides that Gary Keller has came up with, and I think this is awesome, is that the real estate market macroeconomically is still really, really good. If you look at the February days on market from 2020, 2021, and 2022, February 2020, your average days on market for macro real estate was 36 days on the market. You look at February 2021, the days on market is about 18 days on market. In February 2022, it's 17 days on market. So that days on market shows that there's super strong demand for buyers. And as we see, all these listings are going multiple offers over ask, just record numbers for real estate sales, which is signs of a very, very strong market. Now, what I think the Fed is doing is, if we go back a few months where to earlier this year, when you can get 30-year fixed owner-occupant conventional financing at 2.75%, interest rates have almost doubled to right now, today's day and time, a 30-year fixed owner-occupant conventional is going for about 5.375%. So that's about a 90% increase in interest rates. How does that affect the market here locally? I think here in Philadelphia and all across the country, I mean, people are passing with flying colors with their debt to income ratio on purchasing real estate. So it's not really like an affordability issue. I think people coming out of COVID have done pretty well and have weathered the storm and are now in a better position than they were in 2020. And it was pretty much like a V-shaped recovery. So in terms of demand and buyer purchasing power, I think it's still there. What's going to be interesting is how far up are these interest rates going to go. So if you go on the next slide, we're now approaching the 20-year real estate interest rate average from about 6%. So we're about like half a point away from the 20-year interest rate average. And how far is the Fed going to push rates up to kind of lower inflation and lower the days on market? Because what Gary Keller is saying that the federal government doesn't want to do is keep up inflation, because inflation like completely polarizes the country, and the people with money and with assets, their wealth completely goes up, whereas people with stable jobs that don't really go up as much, everything's more expensive, and you see that big gap in wealth, which is just not good. And I'm told that that's why, the Fed is pumping these rates up super high. When you look at the macroeconomic supply, there's very supply across the board. I mean, here in Philadelphia County, in an even market, you would have 6 months worth of supply, and where if new supply stopped coming to market, it would take about 6 months to sell the current inventory. And currently in Philadelphia County, we are probably at a 1.5 to 2 months worth of supply. And I'd say the market all across the United States, just super seller markets everywhere. And part of that reason is developer pricing has increased substantially. I mean, I'm building a house right now, and when I first got my lumber budget, it was at $18,000 for the lumber material to build a 2,350 square foot house. And that price has gone up 3x to where, to build the same house now these days is costing $60,000 worth of lumber. And to go on top of that, I mean, steel, I heard, has gone up, 4x. Labor everywhere has increased, which is just driving up the cost of developers. But the thing is what I'm seeing from developers is these developers are pretty well capitalized, and I don't really see a situation where sellers are forced to drop pricing and demand still there. So it's really interesting to see how that is going to affect the market and how that is going to affect pricing in the real estate market. Another interesting thing about COVID and everything that happened is that with all the stimulus and all the EIDL loans and PPP loans and the $2,000 stimulus checks, I heard that about 40% of US dollars have been printed since 2020. So there's a lot more money to go around in the economy, which is kind of like how inflation happens and how pricing has gone up. So I wonder how far prices could really go down if the money supply is that much higher. So, no one really has a crystal ball, and you can look at, there's people that's saying, hey, the market's going to keep going up. There's people that are saying, the market's going to keep going back down. There's people that are saying interest rates are going to stay where they are. There's people saying that, interest rates are going to go up 2%. I don't think anyone really knows for sure. There's just a lot of uncertainty and some volatility in this current market. So my advice to take advantage of this market is, number one, I really love residential loans, in where if you're buying a home for your personal residence, and let's say you're going to go buy a $750,000 house. Well, if a home is worth $750,000 and you get a good deal, a discount below market value, and you get it at $700,000, there's some equity that you have there by buying correctly. And what's great about a residential loan that a lot of people don't know is if rates all of a sudden go back down, you can go and refinance that loan and not pay any points. See, in a commercial loan, if you're paying, 1 or 2 points on that loan, a $700,000 loan, you're paying $7,000 to $14,000 in loan origination. If you're buying a home for your primary residence or an investment property or through, a residential loan, you're only paying an origination fee of $1,000. So your interest rate risk is much less exposed when you're purchasing an asset through a residential loan. And if you're worried about like the liability of buying with an LLC or not an LLC, you could just get, a $2, $3, $4, $5 million umbrella policy, for $100 to $200 a month to protect the downside of anything happening. So the second piece of advice that I would give is, to not get too over hasty on a property that you're buying. Like, don't just buy something because your lease is expiring in 30 to 60 days and you absolutely just feel like you have to buy. Run your numbers on what you're buying to make sure that it's a correct asset. So I'll give you an example. If you're looking to buy in New York City, and let's say, it's $1 million 2-bedroom condo and it's $7,000 a month to carry the asset, and when you're renting, your net of fees is only $4,000 a month, to be stuck with an asset where you're, cash flow negative for $3,000 a month could put you in a really bad position down the road. So ideally, you want to buy assets in where at the very worst you can break even, and also, you want to make sure that you're always buying it right with some sort of discount for the market value, or buying an area that's appreciating or on an upward trajectory. And the final thing, what I love is, in uncertain times, real estate is always an illiquid asset. It's contingent on most of buyers getting financing to go buy the asset. So there's always going to be motivated sellers. There's going to be sellers that need to turn their equity to cash, so they'll accept the lower price. There's sellers, with some sort of family emergency where they need the money to, go pay for college, or money to go towards a loved one, or maybe they just want to get out of an area but can't afford to rent the asset, or they need that equity to deploy into another investment. So that's what's great about buying real estate, is there's always an opportunity to get a terrific deal. And what's great about, just even if you just buy one property a year, that can easily compound itself to get that first $1 million net worth, and to get to 5 million becomes much easier, and you can just compound and build a great portfolio for yourself. And wealth is really created in these bad times by being well capitalized. Let me know what your thoughts are on this video. Is the market going up? Is the market going down? Are you bullish? Are you bearish? What are your thoughts on other asset classes and real estate compares to these other asset classes? I'll be responding to all the comments. Looking forward to hearing from you guys. And if you like this video, like and subscribe, and looking forward to putting more of this out there.